So in this video, I want to talk about how I use the MarketSmith platform to do some basic preliminary stock analysis. MarketSmith is a platform that I use on a daily basis. I'm not officially associated with MarketSmith in any way. I don't recommend them. I'm just saying that I use it to analyze stocks, at least the preliminary analysis or screening. And I will show you the process. So that is why I'm creating this new series of videos, which I call MarketSmith India tutorials, where I show you how exactly I make use of the platform. I am a premium subscriber of that platform. So let's log into MarketSmith and I will show you a powerful tool in MarketSmith, which I use daily. Okay, so let's say I write here the name of the stock. Let's say Choice International. Okay, now it says take trial, which means I have not logged in. So I click here. I go to login. I log in. Okay, then I will put the name of the stock again. Now I am inside the website. So this is Choice International company. It shows all the information about the company, the ratings, the master score, some description, summary, financials, checklist, things like that. If you scroll down, there is tons of information about the company. But what is important, if I am looking to buy a stock, I don't have too much time to do all of this analysis. Okay, so let's say if I have 10, let's say I have 100 stocks on in my radar. When I put the filters, let's say I get 100 stocks. I can't spend more than 10 seconds on each stock, right? Just to skim through all those stocks. So that is why I have created a system for myself, a method for myself, which tells me whether with this stock is really worth my time or not. And I will explain to you that method. So you see there is a chart here and there is this small button here. It's very important. See, you can expand this. So when I click here, it expands. When I press F11, I'm on a Windows software. So I press F11. So it expands the screen. So this is in one snapshot. Okay. In one screen, I get the entire information of the stock, which is important for me as a trader or investor, at least in the initial part of my entry. At least when I'm getting into the stock, this is the information that I am looking for. Once I get into the stock, then I might dig deeper. I might go beyond this data which is available on this screen. Okay. So let us start with some analysis of this stock. I will show you a sample. I will show you what I am looking for. Okay. And normally when I look at such a screen, I do my entire analysis in less than 10 seconds. But I will take some good time here to explain exactly what I am looking for. I have done this so many times that whenever I open such screen, within 10 seconds, I know whether I want to be a part of this stock or not. Okay. But let me deconstruct those 10 seconds for you. What is it that I am looking for? The first thing that I look for is the base. I look at the right side. Okay. And MarketSmith is such a great platform that they mark that base for you. See this dotted line. So all I have to do is just click here. Okay. And it gives me at what base I am buying the stock at. So it says, see in the top rectangle, when I click here, it pops up two rectangles. In the top rectangle, it shows pattern is cup and stage is 9. Stage 9 means base 9. Now, if you looked at my earlier videos, I have explained that whenever you are buying a stage 2 uptrending stock, that stage 2 is divided into early stage, middle stage, late stage. Okay. Early stage, you will have base 1, base 2. Middle stage, you will have base 3, maybe base 4. Late stage, you will have base 4, base 5, base 6, and beyond. Okay. So here we are looking at base number 9. So before even I look at this data, this stock has already got a negative point in my mind because I am buying too late. Okay. The stock has probably gone up too much before I choose to buy here. Okay. So let's look at that. So if I go to the weekly chart, if I see here, I think this was base one. See this, when I click here, it shows cup stage one. So from here, the price here was 20. Now it is at 400. So the stock has already gone up 20 times in 5 years. Okay, so this was 2020 March, which was the time of Corona. And once it came out of that Corona bounce, okay, it went up 20 times in 5 years. So the stock is already overextended. Okay, a stock which goes up 20 times in 5 years, how far can it go? Okay, further. So I know beforehand that if at all I try to take a small position in this stock, if at all I try to trade this stock as a swing trading position, I should not be in the stock for a long period of time. I should look to quickly exit the stock. Okay. So one negative point in my brain immediately when I look at the base count. Okay. That is one. Second thing I look for is the relative strength line. A relative strength line tells us the relative performance of the stock compared to the Nifty 50 index. Now, in this case, the relative strength line is rising, which is very good. That means the stock is outperforming the index. Plus, you have blue dots here. Blue dots means this line is hitting 52-week high on the relative strength line. So the stock has never been more powerful. Okay. And it is logical because it's already in base number 9. Okay. So one positive, one negative. Now I come to here. I don't even look at the basic information. And now I directly come here. I look at the master score. Master score is basically a score given by MarketSmith to a stock based on various technical and fundamental factors. Now, we'll not get into the details of how that number is calculated. I personally don't know and I don't care. What I do care about is this number should be more than 80. Okay, because it divides the entire stock market into 5 percentiles. So the top percentile, which is 20% of the stocks, they will have a master score of 80 or more. So I'm going with the best stocks if this is 80 or more, which is not the case for this stock. So that's a negative factor. EPS rating depends on 4 different factors. They will look at the current quarter's earnings growth. They will look at the latest 2 quarters earnings growth. They will look at the annual earnings growth, and they will look at the earnings stability and consistency. So it's not just the earnings that matter. It is also about the stability of the earnings, consistency of the earnings. Okay. So 93 is the EPS rating, which is fantastic. And you can see why that rating makes sense because you see sales are rising, earnings are rising. Okay, good sign. Next, price strength is 84. I would prefer this number to be more than 80, which I considered good. So in this case, 84 is a very good number. If this rating is more than 90, it is even better. Okay. Accumulation distribution rating is A plus, which means institutions are accumulating the stock. Fantastic. So good positive points coming here. Group rank is 90. This is poor. Okay. I would prefer the group rank to be less than 40. Okay. If it is less than 20, it is like icing on the cake. But here the group rank is poor, which means this is a strong stock in a weak industry. Okay. So that's a negative factor. So as you can see, there are some positives, there are some negatives. So we are still 50-50 on the stock. Now I come to the number of funds. Number of funds have been increasing every quarter. It has gone from 11 in September 2023 to 41 in June 2024. So the number of funds that are owning the stock is increasing. However, I look at this number on a standalone basis. This should be at least in 3 digits. I mean, at least 100 institutions should be holding this stock. That shows strength. In some stocks, this number is more than 1,000. Okay. In some stocks, it is more than 3,000. Okay. So 11 to 41, it doesn't seem like a big deal. Another thing that I look for is the recent quarter growth from 24 to 41. How much is the growth? So from 24 to 41 means it's like it has gone up by 17 over 24, which means like almost 70-80% rise in the number of funds that are holding onto the stock, which is very powerful. So I not only look at the increase, accelerating number of funds, I also look at the absolute number of funds and the recent quarter growth in the number of funds. If everything is in my favor, okay, then it gives me confidence. Then I look at management ownership. The management ownership should be more than 50%. Okay, that's a good sign. Then I look at return on equity. Return on equity should be minimum 17%. Here it is 21, which is fantastic. Cash flow should be positive at least. PE ratio, the higher the better, because naturally growth stocks will have a higher PE ratio. Okay. So it gives you a 5-year PE range. I want the PE ratio to be in towards the higher end of that range. Okay. So if this PE ratio is 7 or 8, which is near the lower end, that means there is some problem with the stock. Okay. Earning stability, I don't look at this factor. EPS growth rate, this represents the growth rate of the earnings for 3 to 5 years. It's a complex calculation that MarketSmith is doing. I have spoken to them, but you can safely consider that this is a 3 to 5 year CAGR. Okay, approximately. So as you can see, as I start running through these numbers, you will see positive, you will see negatives. Okay, there is not a single stock which will meet all of your criteria, but I'm telling you what I'm looking for. Now, if we dig down the earnings little bit deeper, you see the earnings are declining. From 260, it went to 190, then it went to 30, then it went to 50. Even sales are declining from 158 to 115 to 58 to 46. So probably the stock might top out. Already it is in late stage. Already the sales are declining. Already the earnings are declining, which means what? Which means the stock might begin to top out. It might show signs of distribution. What is a sign of distribution? Well, you on the top, you will see high volume week closing in stocks. So high volume week closing means the closing of the stock is in the lower half of that candle, and that comes on high volume. That is called as distribution. That is where institutions are getting out of the stock at the top. Institutions will always make money. Okay, if you scroll down, you will see fantastic quarterly sales growth, very good earnings growth, at least in the recent quarters, because of which the stock ran up sharply. Okay, and it ended up creating base number 9, which is very late in the game. Okay, one thing I want you to notice is that the correlation between earnings growth and the rapid price movement of the stock. Okay, so if I look at the weekly chart, see, if you look at the weekly chart, if I click here, this is June. See, this is December. Okay, from December, the price was somewhere around 36. From 36, it has gone to 400. That means from December 2021, the stock has gone up 10 times. 10 times in less than 3 years. Why did this happen? There is a direct correlation. See, when you are in December, by the time you are in December 2021, the September 2021 quarterly earnings are already out, right? They are already published. So let's see what was the earnings of this stock in September 2021. See, you go here, see September 2021, 944% growth in quarterly earnings. So is it a surprise that the stock on this day came out very rapidly because of very strong earnings, triple digit earnings, almost 1,000% growth in quarterly EPS, okay, happening in September quarter. So obviously when it came out in December, okay, the stock shot up 10 times, okay, in less than 3 years. That's a fantastic run. So you can clearly see the correlation between the chart and the earnings graph, okay, or earnings rate, and that is shown by this orange line here. As you can see, from here to here, the earnings have only gone up. If the earnings go up, obviously the stock price will go up, and the sales growth is fabulous. But recent quarters, it has been declining. So I expect the stock to start to top out and probably decline here and start to form another base. So the base will be reset, and the future quarters of the company will decide what will happen to the stock next. The earnings seems to taper down now. Okay, so these are all the things that I am looking for when I am looking at a stock. Okay, now whatever I explained to you, I do all of this because I've done this so many times. All of this happens in less than 10 seconds. I quickly look at the ratings. I quickly look at the ROE. I quickly look at the P ratio, the quarterly growth rate, the base formation on the right side, and that my body tells me, it gives me a feel of the stock. Okay, I don't rely as much on the brain as I rely on the feel. My body gives me a feel about the stock, and that's how I take my decision based on that intuition, whether I want to get into this stock or not. Okay, currently I wouldn't get into this stock because declining earnings, declining sales growth, at least it is decelerating. Okay, poor industry, the stock has probably broken out of this base, is just coming out, but it's base number 9, so it is too late in the game. Not many funds are holding on to the stock. Master score, I would prefer, should have been more than 80. So a lot of factors which are not in my favor. And if I'm getting a stock in base 2 or base 3, why should I get put my money in a stock which is already reached base 9? Because by the time a stock goes from base 2 to base 4 or 5, it's already up triple digits. Okay, I have explained this in my previous videos. Check my video on base counting. Okay, check my videos where I discuss individual stocks. I talk about things like how I measure the base, how I count the base. Everything is there on my YouTube channel. Spend quite a good amount of time on my YouTube channel. You will learn how to do this the way I am doing it. Okay, so I hope this video was helpful. This single screen that you see, okay, this single screen gives you volumes, tons of information about the stock to at least take a preliminary decision. See, I don't even know what business this company is doing. I don't even know what industry this company is in, but I do know that it's in a weak industry. And that much information is enough for me to reject the stock. Okay. If I start pouring over the balance sheet and annual reports and quarterly reports of this company, I will be wasting my time because there are 100 other stocks on my radar which I have to go through. So I cannot afford to spend more than 10 seconds on a stock. But during those 10 seconds, I want to give my complete undivided attention to a stock, which is possible only with this screen. They give me all the relevant information I need to take a decision whether I need to investigate this stock further or not. And as of now, I don't feel excited about the stock. So that is why I am rejecting this stock. So I hope you like this video. I hope that this series will help you. This series is called MarketSmith India tutorials, where I share with you how I am making the best use of this fantastic tool that MarketSmith has brought into India. I have not seen a tool like this. All the analysis is already done for me here. These ratings, don't underestimate these ratings. There is a lot of complicated calculation that goes before these ratings are finalized. A lot of things are already thought about by MarketSmith before they publish these earnings ratings. Okay, ratings, price ratings. So a lot of your hard work is already done by MarketSmith. Okay, for that we need to have gratitude towards the platform and the guys that are doing so much work to simplify the stock analysis for us. So I give credit where it is due. I congratulate MarketSmith for giving us such a wonderful platform in India, and I hope you will make best use of this. As I said earlier, disclaimer, I am not associated with MarketSmith in any way. Okay, I am saying that I'm personally using this to screen stocks for my own personal portfolio. Okay, so please like, comment, and share this video so that this reaches more people, like-minded people like you, who also want to become professional stock traders. Thank you so much.